Okay, hi. Here's an update for March 12. I advise you to see my previous videos to get some context and background. So I'm quickly going to go through some thoughts here. We have the cycle, 3.5 year cycle that has topped out. So where do we go from here? I had some scenarios here. Well, let's look at these. Here are previous 7-year cycle highs, and we see we are quite low here. Does this favor upside? I divided this into two scenarios. So here we are following this scenario, possibly making a low right now and going up to May, because the other scenario was making a shoulder in March, and it doesn't look like we are doing that. The other group of 3.5 year cycle corrections or bear markets, they are a bit more spread. I divided them into groups. So here we have this group of deep corrections, and that was the bear market low, and then up we go. So we could be in this group. The other group suggested shoulder in May, and we are not following that scenario. So what to get from this? Well, some thoughts here. Well, the 3.5 year cycle is also pointing up from here, but let's look at, here's a very long-term chart, and the red line is accumulated up and down days. So we see in the 1950s and 60s we were going up. Then we have stagnation in the 70s, going sideways. Then up to a year 2000, where we had some selling, and after that we have been just going up. Even the financial crisis here doesn't show well up in the accumulated up and down days. So since 1985, we generally have just had a market going up, except for the tech bubble. We had some selling. So the bear markets, or the 3.5 year cycle lows here in 2011, we did not see much selling there. We did see quite a bit of selling here in 2015-16, but price-wise we didn't do much. We didn't go low, and after that we're just going up. So we are at a possible 7-year cycle high. So I do expect us to have some significant downside here. And as I concluded earlier, most likely we have seen the cycle high and the bear market has begun, but we have not gotten all the confirmations for this. So I do expect us to see more real selling here. We had only soft landings since 1985, except the tech bubble and the financial crisis was a hard landing. But every cycle low here was a buying opportunity. 2011, quickly down, and then that's it, and we were going up. In 2015 we were going down 2 times, but very shallow, and we were going up. 2018, that's it, we're going up. We had a COVID panic, but that was, say, not supposed to happen. So I do expect us to see more consistent selling here. And that could produce something that we are not that used to, and that's well, in the bull market you tend to go up, and you get overbought, but doesn't mean a thing. It doesn't mean, and then you get the correction, and if you get bearish there, that's just a bear trap, and then you continue going up. Well, if we have, we could be getting something bearish where you get the opposite, that we're going down, and the bull market rules suddenly doesn't work anymore. We're oversold, we have to rally. No, we never rally. We're just continuing down, and then finally you get a big rally, but it quickly stops, and then you continue down. So possibly we could be in that kind of situation. Let's here look. This is a kind of pattern recognition in the weekly data, and I have a scenario here, and here we are right now. So this pattern recognition may shift right or left and adjust. So, but right now this scenario suggests we could be going down for another 2 weeks. Well, here is the year 2000 case. It behaved a bit different here with this extended top, but then it came down and found its correct pattern, so to say. Here are some possible analogs: 1965, 1972, and 2007. And as we see, these comparable examples, they continued down for a while. They made a bear flag or a shoulder, a big shoulder, and then continued down. So we could very well continue down here for a while. Let's look at some more examples. This is the year 2000. So this was the top, and I'm looking here at this wavelet. We were going down once, and then staying below 50 MA, going down twice. I put this arrow here, breaking a bit above 50 MA, and then going down for the third time. Here is 2007. We were going down once, up, barely above 50 MA, down again, and down for the third time. And here's the arrow. So here we are now. We have gone down once, and we are on the second, and it doesn't look complete to me. And here is the comparable arrow. It should suggest we are going down still many weeks, and the bounce may just barely break above 50 MA, and we could go down. So I'm not saying this will happen, but it's something I'm looking at. It might happen. Let's look at something else. I showed you this, the short cycle of about 1 month, and I said we had possible cycle low here and here and here, and I thought this was a very short cycle. Perhaps this wasn't the low, perhaps we are going down here. Yeah, it looks like we are already below the previous low, so that could suggest we still have another week or so with downside. Here I have drawn some other possible cycle interpretations, and they both also suggest we have more downside here. So yeah, I have no conclusion for the short term. In my hourly data, I do have a swing sell set up, triggered just before the weekend, suggesting we have an edge for downside the few days. And another thing, there's something interesting happening, and that's a geomagnetic storm occurring late Sunday and to Monday, and these geomagnetic events tend to produce a lot of volatility in the markets. So that is kind of supporting a case where we could have either a panic to the downside the coming week or weeks, or we could have a big relief rally. So